Money laundering isn't only about how money moves, it's also about where it goes. Some countries, and some routes between them, carry far more risk than others, and criminals use them on purpose. I've built the monitoring that flags risky destinations and routes. So let me show you in plain terms what makes a country or a route high risk and how a bank watches the map. Banks don't treat every country the same. Each one gets a risk rating based on how strong its rules are, whether it's under international watch, and how much corruption or secrecy it has. Money going to, from, or through a high-risk place gets a closer look. Geography is one of the strongest risk signals there is. Where do those ratings come from? Mostly from public lists. The international watchdogs keep two: a gray list of countries being watched while they fix problems, and a much shorter blacklist of the worst. Today, a small group that includes places like North Korea and Iran. The EU keeps its own list too. A bank scores countries using these, along with things like sanctions and corruption rankings. But it isn't only single countries, it's routes. A corridor is the path money takes between two places. Some corridors are normal and busy, workers sending money home. Others are known for trouble, drug routes, conflict zones, secrecy hubs. So the risk isn't only the destination, it's the whole journey the money takes. Let me show you. Fictional example, dummy numbers. A small local shop normally only pays suppliers in its own country. Quiet, predictable, all at home. That's its normal. Then it starts sending 30,000 euros abroad. The money first lands in a company in a secrecy-friendly country. Then within a day moves on to a country on the high-risk list, then onward again. 3 countries in 2 days, ending somewhere high risk for a shop with no reason to trade there. Look at what's suspicious. It isn't one thing, it's the combination. A high-risk destination, a transit chain that hides where the money started, all happening fast, and none of it fitting the customer. That's layering across borders, and the map is doing the hiding. Criminals pick these routes on purpose. A weak rules country may simply not ask questions. A secrecy hub hides who really owns the money. Passing through several countries breaks the trail. The whole point is to put distance and borders between the dirty money and where it lands. So how does a bank catch it? First, it scores the map. Every country and every customer gets a risk rating, kept up to date as the lists change. A payment to a high-risk country lights up far faster than the very same payment to a safe one. Second, it watches the routes that don't fit. Does this customer have any real reason to send money there? A company importing goods from a country is normal. A local hairdresser wiring money to a high-risk place is not. The corridor has to make sense for the customer. Third, it follows the hops. Money that bounces through 3 or 4 countries in quick succession, especially through secrecy hubs, is trying to break the trail. Each hop adds distance and confusion. Good monitoring stitches the chain back together so you can see the real start and the real end. Now the honest, important part. A payment to a high-risk country is usually completely innocent. Most often, it's someone sending money home to family. Geography is a risk factor, not a verdict. And the wrong response is to cut off whole countries or communities. That just pushes honest people out of the banking system. The right response is to look closer, not to slam the door. Here's what getting it wrong looks like. Years ago, HSBC treated Mexico as a low-risk country, even though it sat on a major drug trafficking route. Because of that one rating, billions in payments in cash went barely watched. The cartels noticed. One of them packed cash into boxes built to slide neatly under the bank's teller windows. HSBC moved at least $881 million of drug money and let through billions more in cash that nobody was really checking. In 2012, it paid $1.9 billion, a record at the time. One wrong number on a map. So good monitoring keeps the map current, watches the corridors and the hops, and combines geography with the other signals: the amount, the speed, the customer. And the rules back this up. Money tied to high-risk countries needs extra checks, digging into where it really comes from and why. Geography raises the bar. It doesn't lower the standard of proof. My take, after building this, geography is one of the loudest risk signals you have, and one of the easiest to get wrong in both directions. Rate a risky country as safe, and you wave the cartel through. Treat every payment abroad as guilty, and you punish honest families. The craft is in the middle. A good map, the corridors that don't fit, the hops that hide the trail, combined and judged fairly. At GK Consultancy, we build and tune exactly this, and we train the people who investigate it. Get in touch at info@gkconsultancy.d. Thank you, and good luck for now.